The State of Crypto is presented by Tron, connecting the world to the power of cryptocurrency.
Welcome back to First Mover. We've got the 411 on ETFs for you. Class is in session for understanding everything you need to know about the spot Bitcoin ETF race. Joining us now to discuss is ETF Think Tank Research Director Cinthia Murphy. Welcome to the show, Cinthia.
Hey, good morning. Thanks for having me.
Good morning. Now, we've seen a flurry of spot Bitcoin ETF applications from multiple major TradFi players, including BlackRock. First, let's get down to the nitty-gritty here. Explain what a spot Bitcoin ETF is.
Yeah, the big issue here that we're trying to solve in the ETF world is that as direct an access to Bitcoin as you can have in a pool type of investment. So today, all you can really access in Bitcoin through an ETF is futures-based products. And so we have been on this race, on this effort to get spot Bitcoin approved, which is basically, if you think about an asset like a commodity like Bitcoin, is a physically backed pooled investment. So a share of that ETF will actually give you claim to the asset itself. So in a spot Bitcoin ETF, not only your performance, your share price is tracking directly the spot price of Bitcoin, but your share actually gives you claim to Bitcoin that should be custody somewhere. Where in a futures-based product, you're just investing, you're in the derivatives market. You just have ownership of those futures contracts. You don't actually have a claim to the physical Bitcoin ETF, physical meaning digital in this case. So the market has been really trying hard to get through the regulatory scrutiny an opportunity to offer investors as direct an exit as you can on a regulated type of investment, which would be a spot Bitcoin ETF.
The question I think some people have here is what exactly, you brought up the differences, but from an exposure standpoint, one would think that a futures ETF would have roughly the same kind of price movement as a spot ETF. And if your goal is, I want full exposure to Bitcoin, but I don't really care about actually, if I really wanted to own it, I'd go out in the market and buy it from an exchange and hold it and do my own custody, et cetera. So if I'm just looking for that exposure using retirement fund, whatever it is, what would be the big deal about, why does it matter if it's a spot ETF? Why do I care if that's approved? Why don't I just buy a futures ETF and get the same kind of returns and volatility that I would see in a spot ETF?
So there's two things to consider here. One is that a futures ETF, you're actually transacting in the futures market. And a futures, a Bitcoin futures is a cash settled, daily reference rate of Bitcoin prices. So issue number one, it's not, directly equal to spot price. And the other thing is that the futures on a futures portfolio, futures expire. So you're constantly rolling that position forward. You can see, prices go into contango backwardation. You have slippage in performance. So it's not a one-for-one exposure as a spot Bitcoin would be. In terms of access, if you look at the advisor landscape, they're looking for that regulated product so that they can, put that in their plans. They can put that in their models. It belongs with everything else as they're building a portfolio. A futures ETF fulfills that role where just directly going and buying Bitcoin for a client, you can't really fit that in the model. So they need that regulated wrapper in order to do that. So the spot Bitcoin is like your purest way to access this, your most direct one-for-one exposure. Where a futures, you're transacting the futures market. Tax treatments are different on a futures versus, the commodity played on a spot price. So there's different considerations there.
Let's talk about this surveillance sharing. This is not the first time we've seen spot Bitcoin ETFs filed, but the major difference here is the surveillance sharing that Coinbase has reached an agreement with Cboe's BZX exchange. Talk to us about what this is. What does it entail? Why is this potentially the turning point?
Yeah, it's interesting because to me it's almost like the ETF issuers are getting smarter and smarter on their arguments. I mean, typically stock exchanges, securities exchanges have surveillance sharing agreements that are established with the brokers transacting in those exchanges, which is to just find and sniff out nefarious trades. So it looks for any kind of trade that's either trying to spoof or manipulate volume, manipulate price. And so they have these agreements and they can kind of keep an eye on these trades and reach out to the broker and say, hey, this doesn't look right. Let's intervene. Let's figure this out. In the crypto world, that doesn't exist because, no crypto exchange like a Coinbase, for example, they're not regulated. So the idea of the surveillance agreement with somebody like a Coinbase, it's cool at face value. It's like it's issuers saying, hey, SEC, you're concerned about this kind of thing. You want control. You want to ensure investor protection. You want to prevent manipulation, fraud, all this good stuff. So fine, we will do surveillance sharing agreement. Coinbase agrees, we will do it. But, is it a moot point? Because Coinbase is not regulated by the SEC. So in theory, if they spot something that looks nefarious, who's going to enforce an action on them? Because the SEC, it would be an overreach. SEC has no reach into Coinbase because Coinbase, should Coinbase be under the CFTC instead? Should be under the SEC? There really is no one regulatory body that has oversight over a Coinbase. So the surveillance sharing agreement is an interesting move because all it really accomplishes is trying to address SEC concerns and it pushing that conversation forward, a conversation that has been pretty much stagnant for a decade, stuck on this, surveillance and control and protection conversation. And so issuers are pushing that, saying, here, we agreed to come up with some surveillance agreement, but is it really going to be effective without an actual regulatory oversight, which currently nobody really has over somebody like Coinbase? It becomes kind of a tricky point.
Do you think we're going to get an approval on any one of these applications?
So the next date we're all watching is mid-August when, there should be some kind of either decision on, I think, the ARC filing or punting, which is probably where we're going to see. I'm sure, the guessing game right now is insane. So there's a lot of people saying this happens this year. I mean, at our firm, we haven't really changed. We don't think this really solves any problems until Congress steps in and decides who regulates all of this. Is it the SEC? Is it the CFTC? Is it a combination of both? Are they going to create a digital regulatory site? Until Congress takes a step here, it's unlikely that any of this is truly solved if these concerns are legit, the concerns that the SEC has been raising for 10 years. So we are looking at 24 to 36 months before we actually get a spot Bitcoin ETF. We're being on the conservative side. But there's a lot of people betting that because BlackRock is now in the game and they're the largest asset manager and they're well connected, that it could change. But it's anybody's guess at this point.
All right, Cinthia, we are going to leave it there. Thanks so much for joining the show.
Thank you for having me.
That was ETF Think Tank Research Director Cinthia Murphy.